So, what is stock market? What is share? In this chapter we will discuss the basics of stock market. Let's assume Mr. X has a profitable business. Now he wants to expand. But to expand his business, he needs lots of money, which unfortunately, he doesn't have. So now, where can he get money? Like any person, he can go to the bank and apply for a business loan. But the problem with loan is, if his expansion plan fails, he has to pay the loan from his pocket. Fortunately, there is a better way to raise money for him. He can sell a small portion of the ownership of the company to investors. This way, whatever the money he will raise, will never have to pay back. He can use the money for any purpose. But the only con for him is, he has to share his future profits with the investors. A business can raise funds from venture capital firms, or from angel investors, or they can also raise funds from public. If a company decides to raise funds from public, it has to go through certain procedures, which is known as initial public offering, also known by its acronym, IPO. In IPO, a company sells some portion of their ownership to the general public and raise funds. After IPO, normally those shares get listed in share market. Share market is a market where you can buy and sell the ownership of businesses. In India, the two main stock exchanges are National Stock Exchange and Bombay Stock Exchange. Though National Stock Exchange is the most popular, but Bombay Stock Exchange is the oldest exchange in India. Let's assume your friend has a retail shop. The business earns 25,000 rupees per month, which means 3 lakhs rupees per year. Your friend needs to raise fund to expand the business, so he decides to sell 20% ownership of the business for 2 lakhs. But he is unable to find any investor, so instead of selling a chunk of the business, he decides to break it down into shares. So he breaks the total 100% ownership into 10,000 pieces. Let's do some math here. 20% of the business is worth 2 lakhs, which means 100% of the business is worth 10 lakhs. If we break 10 lakhs into 10,000 pieces, each piece of the business will cost 100 rupees. So, here the total number of shares of the business, or, in other words, total share outstanding, is 10,000. So, if you buy even one piece of these 10,000, you will become an owner of the business, just like your friend. If you buy all 10,000 pieces, you will own the whole company. But here, your friend doesn't want to sell the entire business. He only wants to sell 20% of it, which means in market now only 2,000 shares are available for public. As we have already mentioned, your friend's business's annual profit is 3 lakhs. So if we divide it with total number of outstanding shares, we will get the earning per share, which is 30 rupees. Which means, every share you buy with 100 rupees, it will earn 30 rupees every year. So can we say, share is nothing but the miniature version of business? So when you look at an individual share, basically you are looking at the company. So now if you buy the share of Reliance Limited, you will become an owner of Reliance, just like Mr. Mukesh Ambani. At the time of making this video, the price of Reliance is 1,855 rupees, and earning per share is 62.90. But, will you get this 62.90 rupees at the end of the year? The bad news is, no you won't. The board of directors will decide what will happen to this earning. They can decide to invest it back in business, they can pay you dividend, they can use it to pay off loans, they can do anything. So why do we invest in share market? when we don't even have control over the income. Normally, value of a company depends on the earnings. If earning increases, the value of the company increases. If earning decreases, the value decreases. So over time, as the earning of the business increases, so as the price. If you invest in company, with time the company will grow. In the GDP chapter, we learned, top 50 companies on average, grows at least at the pace of GDP growth rate. So even if we blindly invest in top 50 companies, we should make anywhere in between 13 to 15%. In this video, we learned, what is a share, what is IPO, what is a share market. We only covered the very basic parts. If you liked our video, please like and subscribe. Also, we have a course on technical analysis, where you can learn directly from professional traders. With their guidance, you can become a professional trader in no time. Thanks for watching our video.